Welcome back to the Sprott Money News monthly precious metals projection video. I'm your host, Craig Hemke. Joining us as usual here in July of 2022 is Chris Vermeulen of the technicaltraders.com. Chris, good to see you.
Hey, good to see you, Craig.
It doesn't look like the last month has wearing on you too badly. I mean, you can't know this. I'm actually only 28 years old, and look what this has done to me. Anyway, it has been another tough month, but we're going to talk about that and where we might go from here. Before we get started, though, of course, just a reminder that this is brought to you free of charge by the good folks at Sprott Money. So do a couple of things for me. One, visit sprottmoney.com and thank them for putting out all this great content every month. Anytime you're in the market for metal or a place maybe to store that metal, Sprott Money should be on your list of sources to check. Chris has got the website pulled up right there. You can see all of the stuff they have in stock. If you want to call somebody, there you go. People waiting to pick up the phone, help you out. If you want to talk to an actual human being too, that's at 888-861-0775. And then, if anything, make sure you give us a like or a subscribe, hit the notification button on whatever platform you're listening to this, because that helps Sprott Money get the word out as well. It helps those algorithms that monitor, the YouTube and everything else to put their stuff up more prominently, and it spreads the message. And man, we need to spread that message. These are times that try men's souls, Chris. It seems like, I don't know, it's coming more frequently now, but it seems like every 2 or 3 years, it's like this. You go back to 2008 into 9, when gold fell from 1,000 down to 700 before going to 1,900, or you can go back to 2015 when gold got all the way down to 1050 before going to 1350, or you go down to 2018 where it went to 1,200 before it went to 1,900. You can, there's always this kind of action. And now here we are again. I would imagine in what you do, you're probably seeing maybe some positive signs because it seems like the stock market is starting to sniff out a change of central bank policy, but the precious metals haven't seen that yet.
Yeah, I think you're right. I think I think there's, it's been a pretty tough year across the board for almost most asset classes. But I mean, looking on the positive side, I think we're about to see a big shift in the markets, and there's going to be a great opportunity. Might not be in precious metals just yet. In fact, I think one of the reasons precious metals and miners have been under so much pressure is because the stock market is actually very oversold. Majority of stocks are down dramatically to oversold levels. And I think we're just starting to see money pile into growth stocks, into the stock market. And that means they're going to pull money out of kind of what they were hoping were going to be defensive plays like gold, silver, miners, bonds. And they're dumping that money into stocks right now. And we're starting to see that come to life. So, I mean, if we were to take a look at the charts here, here's the SP 500. We're back down to the lows that we saw back in 2021 of March, and this market, it doesn't look like much at this point. It's clearly in a downtrend, but when we look at kind of what stocks and sectors are starting to move, if we go to our kind of our best asset now kind of class here, we've got our top rank ETFs and sectors that are starting to recover, and we've got some new triggers in some of these leading sectors. And what's really exciting here is all of these top 5 sectors are all the ones that did exceptionally well in 2020 when people were moving into the stock market. They're willing to take the risk. These are coming back to life now. And when we look at them from on the daily chart here, you can see the biotech sector. It has had a beautiful rally. It's broken through this blue line, which is the 50-day, built a beautiful bull flag. And now we're starting to see that second run to the upside. So this is a very promising breakout. And this is the strongest sector at the moment in this time. And if we take a look at the solar sector, TAN is still kind of struggling to break out of this, what could be a big W formation, but it's building a big bull flag, and it is primed and ready based on this rally, this pullback. We could actually see it go all the way up to around 96 or 100 if it was to break out. And the other one that everyone follows is the ARK ETF. The ARK is kind of the big flagship for Cathie Wood. And it's been trying to carve out this bottom for a while. And it's just starting to break out. And of course, this could have a fairly significant run back up to the 70 mark, which may not look like much in the grand scheme of things when you go way back to where it was, but a run from where we are up to 70 is actually, a 50% rally that could happen really in just a few weeks. So money, I think, is going into risk on equities. And that's where we're seeing money flow out of the precious metals, the miners right now, because people are saying, you know what, I give up on the miners right now. People are just literally tossing in the bag. You look at the gold miners, gold, silver, the volume is spiking. And that's because people are panicking. They're giving up on the sector. It's washing out, and money is now going back into these growth stocks. So I think there's an opportunity for the stock market going forward, and miners in metals are going to take a little while to build a new bottom, hopefully build a bottom, and then rally from there in maybe a month or so.
It's interesting you say that, because again, the stock market, those sectors, the ones that rallied the hardest maybe in the spring of 2020 and led the way out of that sharp decline, you could say they were sniffing out, what was going on. I wonder if, because the stock market's been getting bought on the dips in general. The S&P falls and then bounces right back. Yeah. And as we've seen, the stock market seemed to get bought on the dips, Chris. And so I wonder if they're not starting to sense, whether it's the recession in the US, it's just a terrible situation in Europe, that there's this eventual shift back to easing and lower interest rates and the like. Again, like you said, that'll trickle down and impact the metals as it has done positively in the past. But to begin with, though, you mentioned the shares just getting washed out. I mean, we're back, the GDX is back down to 26. Now, that's the level I've been watching, because 26 had acted as resistance for quite a long time in 18 and 19. Now I'm wondering if it might provide some support. Can you pull up a chart of the GDX? Let me know what you think.
Yeah. So here's the chart of GDX. We're following down into these two blue lines that I drew a long time ago, and it's kind of a support range. We're definitely looking oversold. I mean, I think we're primed and ready for probably the miners to start to rally, just because based on sentiment alone, the amount of emails, it's funny because on I think it was Sunday night or Monday night, I got a wave of emails. We saw Monday night, gold gap up a little bit on the futures market. I mean, very little, but I got a wave of emails for some reason of everyone saying, it looks like it's going to be a good week for metals. Gold is up. And I was talking to subscribers in the morning, doing my morning routine video, kind of like we're doing now. And I said, listen, I got a wave of emails and about everybody excited about gold this week. And based on the chart, if the chart moves up like 0.5% for gold, and everyone's excited about it, that means everyone's holding on. They're on the wrong side of this trade, and they're really excited about any upside move is amplified in their brain. They think it's the bottom. And I was saying that this could be, the start of a washout this week for gold and silver. And then the market's open, and we've just seen gold, silver miners just collapse this week. Yeah. And that's a good thing in a way, because that's how bottoms are made. We need everyone to finally give up on the commodity, the asset, wash out. When we look at, you look at gold, for example, if we look at GLD, we're starting to see a spike in volume here. Mm-hmm. And that usually means everybody's stops are getting hit. So I do think we're getting close to, you look at gold, we're down to these major lows. Every time I got down here, we saw a massive rally. So we got the panic, we got the volume. People are actually just giving up and getting stopped out of trades. And it's at support. So it's starting to look good. But I mean, gold, silver miners are far from being in an uptrend. There's a lot of work that needs to be done. I think the focus and the money right now is going to be shifting to growth stocks in the indexes for the next potentially few weeks.
Chris, what do you think as a technical analyst? What do you think about measures like relative strength? And because like the relative strength index in gold futures and silver futures, the GDX as well, is way down below 30. Yeah. Do you put much stock in that?
Yeah, I think I look at the RSI in a different way than a lot of other people. So the indicator RSI, when it's down below 30, to me, that means it's not so much oversold. I don't see it as oversold. It's confirmation that the trend is down. There's strong momentum. And the biggest drops actually happen when the RSI is like below 30. But a lot of people do the opposite. They're like, oh, RSI is oversold. It's a buying opportunity. And over time, if you were to just average it out, if you were to get in every time the RSI, for individual assets gets to 30, you'll notice there's always a huge drop before it actually bottoms. So
Yeah.
to me, it's a bearish sign. It means it's in a strong downtrend. Trends are more likely to continue than they are to reverse. So you got to let it flush out, let the bottom fall out, and for it to reverse. And it's the same with the flip side. When it's above 70, people usually are like, oh, I got to trim profits, but that's actually the power zone. That's like the market or that asset flexing muscle saying it's stronger now than it has been in the last certain amount of days. Why would you jump off the train when it's actually flexing its muscle saying, it's ripping to the upside. So above 70 is actually more of a buy signal than it is a sell signal. So it's a big difference in how most people see it. And now that if you watch it and follow it that way, you're going to realize, holy cow, when it gets above 70, that's when the biggest pops and breakouts happen. Right now, gold and silver below it, you got to be careful. This is where the bottom keeps falling out until it does put in a bottom.
And to that end, copper has just absolutely died an ugly death over the last month, and its RSI is down to like 15. So it's not like it goes to 25 and automatically has to go back up. It can go even lower. So just kind of heads up for everybody. All right, Chris, let's just look at two charts, kind of directly related to the precious metals. Sure. Would you mind taking a look at that dollar index chart? It seems as if with everything being traded by machine these days, pre-programmed algorithmic trading, upticks in the dollar index seem to directly correlate with downticks in the COMEX digital metals. Yeah. Now, again, fundamentally, that doesn't make a lot of sense because the dollar index is mainly going up because the euro is going down. But that doesn't really matter. The dollar index ticks up and the metals tick down. And so can you take a look at that long-term dollar index chart and tell me what you see? Because I know it's at about 20-year highs. Yeah.
If we take a look at the long-term chart, let's go way back here. Go back into I don't know how far back this actually goes. There we go. So yeah, we're really just starting to break out. Actually, let's take a look at the monthly to get that, since this is the monthly kind of review. This gives us a little bit cleaner of a chart. We're just kind of starting to break out of this, huge rally up. It's been consolidating in this pattern here for several years. Now it's breaking out. The next stop is, 120 up at this level. And that could apply. We talked about this last month. This rally in the dollar, if it goes up here, is going to apply a lot of pressure downward on precious metals. When or if the dollar does get up here, I actually think that's when precious metals are going to start potentially a very big rally, because I think the dollar will trade sideways for potentially years going forward or lower, which is great for gold. So we still could be under quite a bit of pressure. Now, that might not be that far away. This is a monthly chart. We, could only be 6-8 months away from that happening, and they come back to life. So it'll be very interesting to see how that comes, but definitely the dollar breaking out here is putting a lot of pressure on metals right now.
And how about crude oil? That's another one that, has traded sharply lower just in the last week or two. And, some folks are saying, well, that's due to global recession and demand destruction from the Fed and the like. But I'll be darned, Chris, it just bounced from 95 again. Yeah. What do you see on that chart?
Yeah. So, crude oil to me is going to be trading in this big range for a while, and it's going to be kind of tough to navigate it. And I think one of the reasons we're seeing maybe the stock market come a little bit to life is because crude oil in the last, not counting today, in the past 2 days, crude oil has come down dramatically. And I think we're at that point where crude oil is so expensive. Now everyone is hypersensitive to inflation and energy prices, like fill up their vehicles, that we saw this in the past when crude oil was back up at all-time highs many, many years ago. Crude oil falls, stock market goes up. And that's simply because if fuel costs go down, that means we're going to see inflation, or, there's going to be more spending money from individuals, which is good for business. So, I think we're seeing people really tied into what crude oil is doing. And the 2-day drop that we had, I think, has sparked on some people saying, hey, if crude continues to slide and go below 100 and drop back down into the 70 range, our whole fuel issue, which is burning up a lot of people's money, spending money, will become spending money again to buy products and services. So I think falling oil here is very good for the stock market, for investor mindset, sentiment. I mean, it's still in this big topping range. Who knows where it's going to go from here? I think it could be in this range for quite a while, for probably several more months. And when it does break below this, 95 level somewhere in here, I think that'll be the start of a pretty big landslide. And it could be more of a full-on bear market in equities, in the economy, in a much deeper kind of recession, which I think is a few months away. I think we could see a good rally in stocks. We could see a bounce in oil, but overall, I'm still net bearish long-term here for equities going forward.
All right. Well, hey, let's wrap up with silver. Gosh, down 25% maybe year to date, something like that, probably more, maybe 30 now. I'm sure that people watching us are wondering, they're probably sitting on some cash, waiting to go to Sprott Money and buy some physical silver. If you can save $1 an ounce by waiting, that works out in your favor. But at the same time, it starts moving up, all of a sudden you feel like you missed the bottom, that sort of thing. But if you're a silver investor looking to add to your stack, what do you see in that chart? It looked, kind of like the GDX. I see a lot of what had been resistance at 19 back in 2019, 18 into 19, and into 20 before breaking out in the summer of 2020. And now here we're at 19, and maybe 19's offering some support. Anyway, that's me. Nobody wants to hear what I think. What do you think, Chris? What do you see?
I'm in a similar boat. I think somewhere between all these highs over here, this high over here, we're in. And of course, obviously this huge breakout before it took off in 2020, like you said, we're right down into that sweet spot. And I was thinking just before this call, my brain just kind of sparked on going, you know what? This is like a prime opportunity to go buy a couple more physical bars. This is what you want. You want blood in the streets. You want panic selling. You want a waterfall sell-off, just like we're seeing now on the charts. It's at support. And to me, this is the prime time to go pick up a few more bars, right? That's the way I see it. There's two ways that, people watching right now are thinking and feeling. And I'll share this because I mentioned this with my subscribers yesterday, because so many people are panicking in the precious metals sector. I said, okay, listen, first of all, if you're following price, which is my whole point of technical analysis, we follow, we don't predict. You're never on the wrong side for very long. And we definitely avoided this whole collapse in precious metals, and we haven't been involved in it in a long time from a short-term trader standpoint. So you shouldn't be in my opinion, based on trading, you shouldn't be in it right now for a short-term trader. The odds are it's going lower. It's not a good trade. If you're a long-term investor, I could care less. I don't sweat at all over corrections like this or how long it takes, because I buy physical. I'm looking at the physical. I might not even ever sell. I mean, I'd love to sell it at some crazy price down the road, but I buy the physical as insurance, and I just slowly keep adding to the stacks every year. And this is a prime opportunity where we've had a new bull market take place in silver. It's back down to the breakout point. From a long-term perspective, this is like the opportunity to get in. And we don't really care how long silver could take another 5 years before maybe it breaks out and runs. It doesn't matter from an investor standpoint. We really are holding the asset for long-term growth. Eventually, all commodities continue to rise in value. We're going to see these things eventually take off. So that's the way, you have to try and separate. Are you an investor or are you a trader? If you're a trader, you probably don't want to be involved right now. If you're an investor, this is like an opportunity to average down a little bit for some long-term passive investments, right?
Yeah, right. And that's what dealers like Sprott Money are there for, to help you do. Again, this great content from Sprott Money. So make sure you support them by going to sprottmoney.com or calling them up at 888-861-0775. Also, you should be sure to visit the technicaltraders.com. Chris, tell everybody what they get when they stop by there.
Sure. Yeah. At the Technical Traders, we do a short video every morning, like what you and I just did, except for I cover about 30 or 40 different assets really quick. We go over the different time frames, and I talk about what happened yesterday, what's happening today in pre-market, because I send the video out before the opening bell. And then we follow the markets, and whatever I trade, which is focusing on ETFs, I send all my trades and alerts to you guys, and we follow and trade the markets together. So it's all about following price, purely technical. I could care less about news or earnings or economic data. I simply follow price, and allows us to, doesn't matter what the market does, we're right behind it, following it, doing the same thing, and avoiding market collapses, crashes, taking advantage of rallies, and that's the benefits of technicals, is you can follow price, and we don't really care which way it goes. So that's the game plan.
Well, and I know Eric Sprott respects your work greatly. And additionally, even if you're a stacker and you have no interest in trading, following price and getting some help to follow price can make a big difference. Like I said, if Chris can warn you that silver's about to fall a couple dollars an ounce, maybe you postpone that purchase for a couple of weeks, and save yourself a few bucks. So it can be very valuable. Again, check out thetechnicaltraders.com and come back next month, Chris. We'll see where we go from here, but it's going to be another crazy month. I bet. I look forward to talking to you in August.
Yep. Sounds good. Well, appreciate it, Craig. Take care.
All right. Thanks, Chris. And from all of us at Sprott Money News, sprottmoney.com. Thanks for watching. We'll have another one of these videos for you next month.